How much money do you need to start trading with? 5K, 10K, 25K or 50K? In this video, I'm going to break that amounts for you and I'm going to explain you what amount is good for what strategies and what are the advantages and disadvantages of small accounts. Now, before we start, trading is a business. Like any other business, you just need money to invest in and you have to be able to leave yourself time to develop and money, of course. Nowadays, you can start with any amount of money and a lot of brokerages just offer you to open an account even with a couple hundred of bucks. The point here is that this is not going to lead you anywhere. You would be able to open an account, but you would not be able to trade properly or do some kind of risk management or stuff like that. So let's break down if you have, for example, 5 to 10K account. With 5 to 10K account, you would be able to day trade, for example, futures. You can day trade options or you can trade options in general. You can day trade penny stocks as well. The problem with that is that you would not be able to have your risk management properly. This is the reason because with that amount of money, you would have to leverage a lot. And if you're leveraging with that amount of money, you would have to experience some bigger drawdowns. So for example, if you're using futures or options, those products, trading products, they are just based on leverage. So you would have to invest some amount of your account, and if you have a bigger drawdown, it could happen that you probably experience 20% drawdown on that account. And that might hurt you, of course, if you're at the beginning. If you don't know what you're doing, you should start smaller and therefore not use that type of leverages at the beginning. The disadvantage of 5 to 10K account as well is that you would not be able to day trade stocks. So basically, if you're trying to day trade stocks, it would not be possible with 5 to 10K because you would be under that PDT rule. PDT rule basically means that you need 25K in your account in order to make day trades every day. If you're below that 25K, you would not be able to execute day trades with stocks every day, and you are allowed only to day trade 3 stocks per week, which is of course less if you're trying to learn or if you're trying to build your income based on a strategy. Now let's say you have 25K in your account. Now it is a little bit better because now you would have a lot more room for errors and you would have, of course, a little bit more room for some drawdowns, and you would be able to day trade stocks if this is something you would like to do or if this is something what you are trying to learn right now. 25K is not enough, of course, for trying to build bigger position or trying to make some strategies based on option and hedging position. Therefore, let's say if you have 50K, this is much better in this case because you are leaving yourself a lot more room for errors. If you're having drawdowns, you can start hedging against positions. You can just start using options and build some more complicated options strategies and positions based on that. So you would just be able to manage your risk properly and be more flexible with that. Now, before you start, it is very important to clarify what is your goal. Is your goal to be a consistently profitable and professional trader, or is your goal just to invest in the stock market over the next 10 years? In this case, it would be, of course, much more easier. And regardless of how much money you have, you should always start small. Even if you have 100 or 200K in your account, try to start small and focus on your risk management. Focus on not losing money at the beginning because it is all about risk management. I have seen a lot of people in the past who just have enough money, they start big and they blow their accounts really fast. So at the end, they're burnt out and they're not even able to proceed with trading. Therefore, it is very important to leave yourself room because at the beginning, in the first 6 months to 1 year, you should just focus on learning what is a stock, how to manage properly position, where to enter a stock, where to exit a stock, where is a good point to scale in and out of positions, for example. All those things, they develop through time. This is not something you could learn over a month or over weeks. I have seen, of course, a lot of traders in the previous COVID crash that lost a lot of their money, basically just because they are very confident, they made some money, and they don't know how to deal with risk management. They are too big in positions, and as soon as some kind of correction occurs, couple of percent, like 5, 10 or 20%, they're just losing a lot of money, and they're now not even able to profit on this bull market. Therefore, one more time, guys, it is very important to manage your risk and prevent your capital and not lose your capital. This should be priority number one at the beginning. Now, of course, there are a lot of gurus out there who are trying to sell you the dream of fast money, of fast cars like Lamborghinis, or traveling all over the world. And all of this should be very easy to do, and you should be able to make that kind of money in only a couple of months. Guys, this is of course scam. This is not true. Trading requires a lot of work, a lot of time, what you should put in. So be realistic with your goals. Don't listen to those fools out there who are trying to sell you services and who are making more money with services than trading stocks at all. And be realistic with your goals. There are a lot of pumpers out there who are trying to pump some kind of penny stocks and sketchy strategies. So don't fall into that. I recommend you personally to focus on big caps, try to follow the market, try to understand the market cycles, use maybe fundamental analysis and options with your strategy, and over the long run you would see that it is much easier and much more consistently to make money with that. Now, the more you practice and the more experience you gain, the easier it would get to increase your positions. First of all, of course, you can start using demo account. If you don't have enough money, or if you think that demo account is the right way for you to do, you can start with that. The problem, in my opinion, though, is that if you're using a demo account, you are just not experiencing the emotions. So it is similar like you trying to swim without water, or trying to learn swimming without water, which would be very hard, of course. So I recommend you, in my personal opinion, just use a little shares, like 5 shares or 10 shares at the beginning, just to see how you react to emotions. What is your reaction to losses? What is your reaction to profits? Are you able to deal with that emotions? Because this is one of the most important things in trading and investing, to deal with your emotions. And if you are not able to experience that at the beginning, you would have hard time later on. Therefore, demo trading is great if you want to test here and there some things, but if you know your strategy, just try to trade with small amount of shares and start small, and the more confident you get and the more results you see, you can increase your position. So that's it, guys. Thanks for watching. Hit the like button and subscribe to my channel if you like this video. Stay tuned and see you next time. Bye bye.